You've heard of paper trading, right? It's always pitched as this ultimate flight simulator for the financial markets, a completely risk-free sandbox where you can test out strategies, make all the mistakes you want, and it's all with fake money. I mean, it sounds like the perfect way to get ready for the real thing, doesn't it? But here's the twist. What if that's the entire problem? What if this perfect, totally frictionless environment is actually programming you, deep down, for failure in the chaotic, high-stakes reality of live markets? Yeah, that's the central puzzle we're going to unpack right now. So to really get a grip on this trap, we got to understand the tool itself. And believe me, simulation has come a long, long way. I mean, we've gone from aspiring traders in the early 20th century literally using paper and pencil to track ticker tape, to the legendary turtle traders experiment back in '83, which proved you could actually teach a winning system. And now, well, now we're in the high-fidelity API era, where simulators look and feel almost identical to the professional platforms they're copying. But almost identical is the key phrase, isn't it? Because hiding right under that slick, professional-looking interface lies the first huge problem, what we'll call the realism deficit. There are these subtle but absolutely critical technical differences between the simulator and the real live market. Okay, so the first piece of market friction that simulators just kind of pretend doesn't exist is slippage. You know, in the real world, the price you see when you smash that buy button isn't always the price you get. By the time your order zips over to the exchange, the price might have ticked against you by a few cents. In a simulator, phew, you almost always get a perfect instantaneous fill. And those tiny little differences, they add up. They can easily turn a strategy that looked great on paper into a real money loser. And the second friction, market impact. In your paper trading account, you're basically a ghost. You can buy 1,000,000 shares of some tiny stock, and the simulator's order book is just bottomless. The price won't budge an inch. Now you try that in the real world, and your own order will chew through all the available shares, literally driving the price up against you as you buy. Your very presence changes the game. And this is where the fantasy really meets reality. On the left, you've got the paper trading world. Clean, instant, perfect. But over on the right, that's the messy truth of a live market. Your order gets filled at a bunch of different price levels. There are delays. You're paying the spread. This shows you exactly how a strategy that looks like a world beater in a simulator can just completely fall apart the second real money is on the line. But look, as critical as all those technical issues are, they're honestly nothing compared to the real problem. The biggest gap between simulation and reality isn't in the software. It's in our hardware. It's in our brains. We've just arrived at the psychological Rubicon, and the challenge here isn't technical, it's biological. This quote from some brilliant researchers at MIT, it's everything. Just let that sink in for a second. When your own hard-earned money is at risk, your brain doesn't see a chart or a spreadsheet. No, it sees a threat. It literally reverts to a primal fight-or-flight state, just as if you are face-to-face with a saber-toothed tiger. And this chart right here shows you exactly what that looks like in the real world. When you're facing a loss in a paper account, you're detached, you're analytical, you follow your stop-loss rule perfectly. But with real money, oh man, anxiety kicks in. You start hoping for a comeback and you move your stop, a classic fatal error. When a trade goes well in a simulator, you feel, a mathematical satisfaction. But a real win, that triggers euphoria, which leads to overconfidence and throwing your strategy right out the window. Decision-making goes from fast and logical to slow, hesitant, and fueled by a massive fear of missing out. We can actually give this a name, the cortisol gap. It's the real biochemical divide between these two worlds. See, in a simulator, the logical part of your brain, the prefrontal cortex, is in the driver's seat. But when real risk hits your system, it activates your amygdala, flooding your body with stress hormones like cortisol. This basically hijacks your rational mind and leads to all those emotional or rational decisions. And all of this leads to a super dangerous condition I like to call the paper god syndrome. Because the simulator totally removes the painful feedback of a real loss, you can rack up these huge imaginary wins and start to believe you've actually mastered the market. This massive overconfidence leads you to take completely inappropriate risks the moment you go live, and it often results in a swift and really brutal account blowup. Okay, so that's the trap. It sounds pretty grim, I know, but paper trading is still an incredibly powerful tool, if you know how to use it. The question is, how do you bridge that massive gap from simulation to reality? Well, let's go through the pre-flight checklist. First up, a serious dose of reality.
Just look at the pass rates for proprietary trading firm evaluations. These are tests where traders use demo accounts, but under super strict rules. A staggering 90% of traders fail, and it's not because they don't have a strategy, it's because they can't execute it with discipline when the pressure is on. This tells us one thing loud and clear: your rules have to be non-negotiable.
So what do? You start acting like a professional from day one, even in your paper account. You implement the same risk guardrails they do. A hard daily loss limit, save 3 to 5%. A maximum drawdown that, if you hit it, forces you to stop and figure out what's wrong. These aren't just suggestions. They are concrete walls designed to protect you from your own worst emotional impulses. Which brings us to probably the most important takeaway of this entire explainer: the phased escalation plan. Please do not just jump from a paper account to a full-sized live account. First, spend at least 3 to 6 months in your paper account following those strict pro rules. Then you go micro live. Trade with an amount of money so small that losing it won't even hurt. The goal here isn't to make a profit. It's like exposure therapy to desensitize your nervous system to real risk. Only after you've proven you can be consistent there do you slowly, methodically begin to scale up your size. And how do you know if your strategy is even ready for that? Here's a hard metric for you: the profit factor. That's just your total gross profits divided by your total gross losses. If your profit factor in a perfect frictionless simulator is below 1.5, your strategy is probably too fragile. Real-world costs like slippage and commissions will almost certainly eat away that thin edge and turn it into a losing strategy. To find that profit factor and all the other hidden leaks in your game, you need an advanced journal. Think of it like the black box flight recorder for your trading. You don't just track your P&L, you track your process. You actually log your emotional state when you enter and exit a trade. Modern tools can even use AI to find patterns you'd never see on your own, like discovering you consistently lose money on Friday afternoons. It's that powerful. Okay, this brings us to a final but really critical reframing of what paper trading is actually for. It's not just a tool for beginners, not at all. It's your lifelong research and development lab. The best traders I know never, ever abandon their paper account. They don't see it as some training course that they graduate from. No, they see it as a permanent, risk-free laboratory. It's where they can safely test a new idea, experiment with a new market, or just refine their execution on a tricky setup, all without putting a single dime of their hard-earned capital at risk. So you see, paper trading is both the perfect practice and the perfect trap. It all comes down to how you use it. It can build dangerous, destructive habits based on a false sense of reality, or it can be the ultimate tool for professional discipline development. The choice is yours. Now that you know the trap, how are you going to use the tool?